Welcome back to the Dividend Diplomats YouTube channel, guys. You got your boys, Bert, the Hurt, and Lanny. And guys, it's time for me to make some noise about some dividend stock cleanup, as we've all seen Bert clean up his portfolio quite a bit.
So I'm talking about jump in and smash that subscribe button. Give this video a thumbs up. Holla at your boys. This is such an exciting topic here because it's something we've been talking about for a long time. Getting rid of some positions, not just because we don't like them, but because it's not maximizing our wealth and not maximizing our income potential. And that's why I'm so pumped to hear about this, Laney, and hear what you are thinking with your portfolio.
Yep, guys, being a dividend investor, sometimes you start acquiring stocks in your early stages, mid stages, because, hey, this stock's undervalued now. Let me grab 5, 10, 15 shares there. Oh, this stock's undervalued. Let me grab 5, 10 shares of this stock over here. And you continue to do that. And then what happens is you end up with dozens and dozens of positions. And then those same positions end up saying, hey, even though our stock and our company is valuable, sometimes it's better off to spin off a part of the business to create a new entity. Maybe that, they'll go public and you can buy them there. Or some could say, hey, this is just a drag on our earnings. Let's kick them to the curb like one of these stocks. But I've got 5 stocks right now that are high on my list in my taxable stock account. Yes, these will be taxable events too on the buy and sell orders. And haven't done this yet, but I want you guys to think about what I might be doing here to give me your feedback. Bert give me his feedback too. Looking to exit around $2,600 worth of stock and market value and to move that into my Vanguard trifecta, you betcha. So if you're a new investor, beginner investor, or if you're an investor that's looking to create additional passive income and clean up the portfolio, this video is going to be for you.
Yeah, and we're excited to talk about this. We're excited to get your opinion as well. And the reason why we focus on the tax, especially for the taxable, is if it's a gain, obviously you're going to pay some capital gains on it. So whether it's short term or long term makes a difference for the tax rate. But also, if the position is down, you can sometimes extract a little bit of value out of a loser position by selling and tax loss harvesting and using that future loss to offset future gains in your portfolio. When a stock gets acquired or you decide to sell, you can at least extract some value of some duds in your portfolio. And that's what's going to be fun to talk about and see how many of those are in this transaction, Lanny.
Yeah, of course, of course. And 3 out of the 5 are definitely, spin-offs or split-offs or, wipe my butt with with what's left of this business.
And for sure,
Um,
one of those is that's the case. I can tell you
uh,
that.
two of the stocks, and actually one is on here that actually spun off one of the stocks that's on here. So I thought that was very funny. But we'll first talk about MDU Resources. Ticker symbol is MDU. Technically, I initially poured in. This was a few years ago. I don't know if it was like the year before COVID or the year of COVID. I was like struggling to find some
Mhm.
undervaluation.
Oh yeah.
They were increasing their dividend every year. Ticker symbol is MDU. In total, according to my brokerage, with dividends, the cost basis is somewhere around $900, just under. And MDU actually spun off a company last year called Knife River Corp, KNF, and that will also be discussed here on this video. So they've actually returned a lot because um, I'm actually in a $71 gain position with
Yeah.
MDU. And then they spun off, and that spin off created $642 of value. So it's not like it was a bad. I mean, this is a winner for me. I mean,
Yeah.
from a market value creation, I invested again with dividends close to 890, call it $900, and I'm sitting on about $1,400 of total value. Um,
Yeah, it's great.
so
Take your gains and enjoy the winner. Like that is a reason to sell too. We sometimes get so focused on selling because it doesn't meet your metrics anymore. You can just sell too because you're excited, you have a gain, you might not be adding to it, so why not just take the cash and move it somewhere else? That's a perfectly valid reason to do it.
And I'm always looking at MDU for a while too, because they're on the lower 2 to 2.5% yield and maybe the 2 to 5% dividend growth. And that just, with very little share appreciation, share movement, which I think was part of why they spun off KNF. So I was already always looking to exit MDU, but right now, they provide about $19 in income at a yield of 2.5%. But we'll jump actually down to KNF,
Yeah.
Bert, if you don't mind. What do you think?
Yeah, let's do it. That's while you're talking about them together. Let's hear that. So you said it created $642 of value. What's your return look like for KNF and how much income is that one producing?
Yeah, so it's actually I'm actually sitting on a $349 gain.
Hmm.
So in total, 71 plus 350, I'm at like
Yeah.
$420 overall gain with between MDU and KNF. So that would be a taxable event again for me, but don't worry, there's a stock that could definitely wipe that gain out. Um, they produce no dividends. They haven't had dividend growth. They're on a fiscal year, so I don't really get to see results as when I usually like to see results, like right now. Um, so they don't pay a dividend. I would say no plans yet for a dividend with KNF. The price has been fine. It's been great since the spinoff. But it's just one of these
Yeah.
things where I'm like, what am I doing with it?
Yeah. So it's again perfectly valid for you to want to get rid of it. So that's two. You've talked about MDU and their spinoff KNF. Let's go down here, Lanny. So there are three more remaining that you're looking to dump.
Well, speaking of spinoffs, let's get into Warner Brothers Media Discovery, WBD, the AT&T exit. And the way that worked is that my cost basis from this spinoff was cut to $2,200 for
Mhm.
a WBD. It's worth about $696. So I'm sitting in a $1,500 long-term loss by sitting on this dump. I own under 100 shares, so no option writing, here for me.
Nothing.
No dividends are coming from this stock. So I'm sitting at a pretty nice red when looking at WBD stock. Something that doesn't produce anything for me. At some point, I thought that okay, there's going to be a merger at some point. Maybe there'll be a stock pop. Well, that stock pop was kind of last year at 14 to 15 range, but now it's back down to earth in the 10 range.
Yeah.
Um, I know there's more discussions about Paramount and WBD, but that doesn't look like it's happening.
No, it doesn't. I mean, we could record 8,000 videos here about how frustrating this company is. But so you mentioned it's not working well. You're in a position. Well, did you say for everyone what exactly is your loss on this one here? Have you shared that?
$1,500 unrealized loss right
Okay,
now.
so look,
So
that easily covers the $425 that you talked about with MDU and KNF. So this is now officially a tax neutral transaction if you dump all three of those.
yep, correct. So guys,
Okay.
let us know what you've done with WBD and if you're still holding. Are you waiting on the upcoming earnings release to see what
Hmm.
WB does here in a couple weeks? Let me know.
Number four.
Number four, guys, we are going to talk about the same company Bert dumped, Kendrill. This is from IBM. Ticker symbol is KD. Really not a bad thing. Just doesn't do anything. Sitting at a fat loss based on the cost and the market value. When you think about it, the cost basis I have is about $224 with KD, not Kevin Durant.
Mhm.
The value is $151. So sitting at a $74 loss right now with KD.
Yeah, I mean, I dumped it, so I'm all in favor of you just getting rid of it, not
Yeah,
adding
no
to it.
dividend, bad performance.
Yeah, it speaks for itself.
Yeah.
So,
And no matter what, if I sold this one and I sold MDU, that would actually net out to zero on the tax standpoint.
all
So,
right.
those two are fairly easier moves to make to where it's a net neutral game. And it would provide about $900 between MDU and KD. But
Yeah.
there's five stocks, right, Bert?
Yeah. Yeah. I'm very excited about number five. This one, I can't wait to hear you talk about this one.
So
So I remember when you bought
similarly,
this one.
yeah, this was again the stock, one of the stock that bought while I was probably buying MDU, I think.
Yeah, this
Uh, I bought a handful of shares of NetApp, ticker symbol NTAP. Um, a whopping with dividends, $198.78 cost basis on this stock. Yes, that's small. They've performed decent for me. Don't get me wrong. I mean,
I'd say.
it's up to $387. The dividend doesn't grow every year. In fact, they're on a couple years of a pause. But I'm sitting at 100. Essentially, I've doubled my position.
Yeah, that's why I'm smiling. It was a great move. I mean, it's lock in the gains and take it. If you're not gonna be adding more than the dividend growth's not doing for you, you might as well enjoy the appreciation and have fun with it, especially while you have all these tax neutral events here that to make it so you're not paying taxes on that gain.
And again, I was reading their financials. It's not like they had a great last report, and I'm like, it's $400. I mean, obviously, I still have this $189 taxable gain, so I have to
Yeah.
figure that out. But in
Well,
total here, guys, we're talking $2,631 of value, producing only $28 in dividends or a 1%
yeah.
yield, with an almost $1,000 net total loss on all five.
Yes. All right. So that's what you're selling. What are your leading suggestions on how you would reallocate this funds? That's the other part of the transaction. If you sell, what's your plan of attack for it? Sit there in cash, earn on the nice money market account, or move it elsewhere. What are you thinking?
Well, and keep in mind too, the $986 at a 22% bracket, let's say, will offset my taxes, since it's long term by about 217 bucks.
Yeah.
So there's a little bit of, $217 of tax I don't have to pay. But yeah, let's go into the Vanguard trifecta. You betcha. My goal here is to get close to doubling the dividend that I'm getting, which again was around 27.85. Because again, anything better than what I have. I mean,
Sure.
anything more
Yeah,
than what I have is going to be better, is what I mean.
for sure.
Um, and I obviously like the dividend growth and the appreciation from both VOO and VIG. Obviously, I like the dividend from VYM. So I was thinking of allocating between the three, 940 into VOO, VIG, and then 750 into VYM. That would provide about $53.48 in forward dividends, almost doubling what I was previously getting from the other mess.
Love it because when you sell that other mess together, obviously that yield of 1.06%, all three of the trifecta, you betcha hurdle from the yield perspective. So you're always going to be getting more income. And this is a great time to build up VOO and VIG when you have that rare opportunity to sell stuff that's yielding lower than it and move the funds into it.
Yeah, and then with the weighted average like dividend growth rate, it's going to be even better because that rate's going to be somewhere between 7 and 10% on top of the 2% yield. So I'm getting
Love it.
dividends better now and in the future. So that's kind of the overall goal there.
Love it. So everybody, remember Lanny has not made this move yet. It's a great discussion point, but we'd love to hear all of your perspective on the portfolio moves and shakers in that comment section down there below.
Guys, let me know what you would do. Bert, what are you thinking? Do you like it?
I just did my own portfolio cleanup and it feels amazing. So
Yeah, so this would be five less tickers, guys.
I
And I
know
just looked at it this weekend. I'm at, in my Ally brokerage, 69 tickers.
that's what I'm saying. It's a nice feeling to not have to worry about these companies anymore. Just make the decision and move it into something new. It's not like you're putting a new ticker on. You already have VOO, VIG, and VYM. It's not net new, so you're good.
Exactly, guys. So appreciate it. Remember, it's all about getting better, getting your personal finance journey better, one day, $1 at a time,
Mhm.
building up that passive income to financial freedom, right, Bert?
That's absolutely right. And I think there's one more thing we need to tell these people after they subscribe if they haven't already.
You're either with us or you're against us, Jack. That was Bert, the Hurt Man, and Lanny from the DD, over and out.